For those of you that I haven't got to meet yet, my name's Josh Mettle. I'm one of the co-creators and founders of Neo Home Loans. I'm a serial entrepreneur, which means I have a severe case of ADHD, and I'm completely unemployable. All of you would fire me within the first day, I promise, if I came to work in your businesses. I detest paying. Kevin talked about, the tax guy, the IRS isn't your enemy. Well, I don't think they're your friend either. In fact, on the back of my laptop, I have this little sticker that says, no IRS. And this is my reminder every single day to get my ass up, go to work, and not pay a penny more than I have to the IRS. I file over 30 tax returns each year. I'm in the business of real estate, mortgage, private lending, insurance, and my tax returns are a hot mess. If you were to print them out, which is impossible because nobody has that much paper any days, but they are about the size of a Shetland pony. They're right about here. And if you don't score 1550 on the SAT, good luck trying to figure those bad boys out, because we're really good at getting creative as saving as much taxes as humanly possible. My bank accounts kind of look like a drunk guy on a pinball machine. Ding, 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 money in, money in. I can't stand letting money sit in my bank account earning 1% and then lend it out to somebody else who's going to pay credit card debt at 22%. So like Robert Kiyosaki taught me, put those dollars to work, never let those dollars sit idle. The good thing is, I went to a great college. And after 13 months, the ADHD kicked in. I dropped out with a solid C+ grade point average. Thank you, PE and economics, to buoy those scores of mine. And so now you know a little bit about me. Let's play a game. You all are mortgage underwriters. I'm entrepreneur Josh. Your job is to assess risk, AKA decline loans. You show up at 9 o'clock every day for work. After you stop at Starbucks and get your caramel macchiato, you go into your cushy office and you get my loan application. Shetland pony of tax returns, bank statements that don't make any sense, guy graduated or didn't graduate with a C+ average. Would you approve my mortgage loan application? Let's be honest, we're friends. No, you wouldn't, trust me. Your job is risk mitigation, which means that if you do a loan for somebody that doesn't perform, that's the only way that you're going to get fired. Or maybe you do some of the stuff that Hunter Biden does. But those are kind of some of the only ways that you could get fired from those jobs. And I had that experience as an entrepreneur, despite having a great net worth and having plenty of cash flow, and this chaos of tax returns and bank statements that I described made perfect sense to me. Turns out it doesn't make any sense to a W-2 underwriter who is in the job of risk mitigation. And so I was declined for mortgage financing many times, for a primary residence, for my investment properties, to pull equity out of properties that I had massive amounts of equity in. So what do entrepreneurs do? We start a mortgage company. Yes, of course. So we got into the business of entrepreneurial home loans. We created some products around serving entrepreneurs, enabling you to get access to capital that's inside your real estate assets without tax returns. Turns out this is a pretty big problem. 82% of businesses fail because of cash flow problems. That is a lot of red in that screen, and it's all because of cash flow problems. 29% of startups fail simply because they run out of money. Anybody have kind of a similar experience to this, where you're getting a financial oscopy from a bank and you're running into these similar problems? Yeah, this is a big issue. The entrepreneur's life is feast or famine. We have a great month, we have a great year, the market shift, interest rates change, what have you, and now we have a famine period. The question is, how are we using leverage and capital so that we have a cushion to get through those feast or famine periods? 90% of small business owners say a lack of capital is holding them back. 3 in 10 may not survive the next 3 months without additional funding. So we decided to do something about it. Find a solution for entrepreneurs that might not be able to qualify. Now, why is this an issue? Why do underwriters get paid 6-figure salaries to say no? Well, a lot of the reason is because they're trained on approving borrowers on W-2s and paycheck stubs. A lot of the reason goes back to some legislation that was passed in 2010 after the great financial crisis called the Dodd-Frank Act, where it literally said in that act it is illegal to make a loan to a borrower who cannot prove their ability to repay. Good luck proving my ability to repay with my Shetland pony high tax returns and bank statements that make no sense. So this is the challenge that we set out to solve with our self-employed entrepreneur home loan programs. So, the entrepreneurial capital lines of credit. And I'm going to talk about, mostly in this presentation, I'm just going to talk about liquidity and helping you get to a place where you may have access to liquidity for your business. But this also works if you want to buy a home, refinance a mortgage. If any bank has told you no, that's why we created this program. So this program, no tax returns are needed. You can qualify with bank statements or even income potentially if it's an investment property that you're looking to leverage and get a line of credit on. Access up to 90 to 95% of the value of the property of the home. Loan amounts up to $750,000. We are incredibly focused on fast approvals and not giving entrepreneurs the runaround. We've all been through that financialoscopy where it's just incredibly painful. Anybody over the age of 40 laughs when I say financialoscopy because they know what that means. And we let you use your funds however you want. So if you want to invest, expand, renovate, pay down debt, you can do whatever you want with those funds. In fact, we have a program that will enable you to pull out a line of credit to be used for renovation based on the future value of the home. So let's say you had a property, banks told you no, you're trying to renovate it, we can actually use the future value of the home even. A lot of our net worth as entrepreneurs may be tied up behind the sheetrock of our homes. It's not doing anything for us. And without access to those lines of credit, opportunities disappear, competitors move faster, debt drains your cash flow, stress increases. So the nice thing is, how many of you live in Utah? 1, 2, where are the rest of y'all from? Just out of curiosity. Texas? Illinois, Michigan? Okay, all over the country, fantastic. All right, well for those of you in Utah, you've been given a huge gift. The national appreciation rate with real estate going back to 1991 averages 329%, which is pretty insane because if you only put 5 or 10% down, your property appreciated 3x, but you only put down 5 or 10%. But in the great state of Utah, we've seen 629% appreciation. In Colorado, 597%. Utah is actually the fastest appreciating real estate market in the country going back to 1991. So Utah entrepreneurs, especially that have real estate investments, they've got a ton of equity built up in these properties. Many of them just don't have a way to access it because of the traditional bank guidelines. So what can you do with that capital? Frozen in the walls of your home, open a new location or launch a new product, acquire or renovate investment properties, eliminate high interest rate debt, free up cash flow to scale faster, smooth out the highs and lows of the business cycle. These are all the things that we help entrepreneurs do and have access to. So how it works, it's simple, it's fast, there's no tax returns required. One, you talk with us, we get an idea of your situation. We won't ask you for 27 tax returns if you're filing all kinds of crazy tax returns. We make the process super simple. You qualify fast. Most of our qualifications are done within just a couple of days. We'll tell you if you're good to go or not. Access your equity up to 95% of the home's value. We also have access to second home lines of credit. We also have access to investment property lines of credit. And then you can use your capital to scale your business however you want. Why choose Neo? The entire company was founded by entrepreneurs trying to help other entrepreneurs and trying to help people who don't have access to financing because of these outdated legislation that was passed after Dodd-Frank. Certainly, we want to make loans to people who have an ability to repay, but the traditional guidelines around if your W-2 and bank statement and tax return doesn't qualify, we look deeper than that, and we understand the sophistication that entrepreneurs have to shelter that income. We don't look through the lens of just a tax return. We look at your full financial picture. And our job is to make sure that accessing your capital is fast, strategic, and doesn't feel like a financialoscopy. All right, so this is a QR code. If anybody is interested in talking with us, feel free to scan the QR code. We're more than happy to answer questions for you, whether you need us now or in the future. And I'll stick around here for a few questions. Also in the back is my mortgage partner and business partner, Drake Blaybaum. Say hi, Drake. There's Drake. And these programs I chose today just because of the amount of time that I have to talk about our lines of credit. In other words, how do you access that equity? And many people may have a 2 or 3 or 4% first rate mortgage. They don't want to pay off that 2, 3, or 4% mortgage. So how do we access that equity frozen behind the sheetrock without paying off the 4% debt? So that was the majority of what I spoke about, but we can do the same thing with a new first mortgage. So if somebody needed to buy a home, an investment property, a second home, banks told you no, NEO says yes.